Hello, everyone. This is Roshan, and you are listening to 30 Minutes with Insurance CEO podcast, the show where we decode the strategies, struggle, and success of top insurance agency CEOs. As you, so, you are building a future-proof insurance agencies. Today, I am deviating a little bit from my script as I bring in a guest that I have been trying to chase her to bring to my podcast for a very long time, and today I'm so glad that she's here. Today, I have guest with me is Lisa Miller, CEO of her own consulting company, Lisa Miller and Associates, and she's also the former insurance deputy commissioner of Florida. So glad to have you, Lisa, on the podcast.
I appreciate you inviting me.
All right, why don't we start by just a little bit of icebreaker and uh, help us understand, what gets you excited about insurance?
So, as you know, once you start in the insurance industry, you never leave. It kind of becomes a part of your DNA. I've talked to many that have been in the business longer than I have, and I've been doing it 35 years from both a regulatory standpoint and from the private sector. And what the beautiful part is that every single day you're in it, you learn something. No 2 days are alike. I work with agents, contractors, realtors, insurance company executives, underwriters, claims adjusters, political and elected leaders. And I often laugh and say that when people see me coming, particularly in the halls of the capital of Florida, they either run toward me or they run the other way because those that go the other way are scared of it. Insurance is very intimidating, as you know, and I do everything I can every single day to demystify it. It's like buying a fine wine. You don't want to walk in a liquor store and not act like you know everything about wine. Well, I take all that away. And my clients who are some of the best in the business. I represent Florida based insurance companies throughout this fine state called the state of Florida. And these executives that are in claims and underwriting and CEOs, they care deeply about their policyholders and they'll do everything they can to keep the promises they've made as the journey continues. Thank you for that great question.
Ah, wow. That's so much to unpack, and that's what we're gonna do in the next 30 minutes. So why don't we just start by a very basic, quick introduction of Lisa, what you have done, a little bit of your walkthrough of your career to just for the larger
Sure.
audience to understand.
Happy to do that. I was so fortunate when I got out of college at FSU in the early 80s. I was able to work with, and it was an amazing time, Insurance Commissioner Tom Gallagher at the time. And during that time, we had Hurricane Andrew hit our state. And that was my first exposure. I was in my 20s to real tragedy like that. And I went down to Miami, Commissioner Gallagher, who is still with us and runs a very distinguished insurance company himself. He made and required those of us that employees to go down to Miami from Tallahassee. We didn't have cell phones. We did not have all the tools we have today to communicate. And we did what were called waves of employees, 15 to 20 every week, to go down and help those hurricane victims, survivors. They were true survivors. And that was my first exposure to what catastrophes do. I used to see the trees snapped off like pencils. That was my first exposure, and the most gratifying thing that I was able to do was to be a listening ear for those who had been affected and worked and stayed during the storm and in the aftermath. It was just horrible. So after that work with the insurance commissioner's office, I went in the private sector for about 10 years. I ran an association. I worked for a large Big Four accounting firm. I did a little bit of everything in corporate America. And then, of course, I've done the association work where that's very important when you're a member of a trade association. It shows your professionalism. And then in 2004, 2003, I went back in the insurance commissioner's office, this time with Kevin McCarty, one of our greatest commissioners of all time, and was his deputy. And of course, in 2004 and 2005, here we go again. And we practically slept in the Larson building there in Tallahassee. Commissioner McCarty and our entire team, a million claims, devastation from 7 storms, nothing like you've ever seen. We wondered when it would end. And that was a great experience for me. And then from there, I, left and became my own consultant, opened my doors in 2008, and have been in this business almost 20 years. And I have about 30 clients that are like my family. I do work in the insurance, property insurance space, auto insurance, but I also do work in the disaster recovery emergency management space because there is a bridge between the two. And as you know, when the disasters happen, it's not all just about insurance. It's about the recovery of communities and how these, large contractors that I work with in the Disaster Recovery Coalition of America, a great organization, yet another trade association that has 50 some odd companies that put America back together again after the storm. So between insurance companies giving survivors the ability to rebuild and then the disaster recovery companies giving communities the ability to rebuild, I have a tremendous perspective about what it takes to do it right in best practices after the storm. And I'm very privileged to be where I am today.
Wow. Wow. No, we are definitely privileged to have you with the kind of over years of experience that you have displayed in your work. So, Lisa, you have spent decades helping this, especially the Florida insurance market and the systems that is being run here. How do you describe the current state of the homeowners insurance market? And are there any recent reforms actually stabilizing things?
Absolutely. Great question. I was around, of course, I've been around forever, but I used to watch in 2017, 18, 19, the insanity of this market, the factories of lawsuits. We had one lawyer in particular, Scott Strems, who was stripped of his license to practice by the Florida Supreme Court. We've all read about it, it's all public record. We watched those factories of lawsuits preying on people, policyholders who didn't know half the time they were even in a lawsuit. Some of that insanity. We had the assignment of benefits problem where people were signing documents on an iPad at someone at their front door. And my motto has always been, your good friends come to your back door. Don't answer your front door. And we just saw all that going on. And in my corner of the world, I did everything I could to encourage these claims executives who every Monday morning they would walk in and have 50, 100, 150 lawsuits. It was insane. Well, Governor
Wow.
DeSantis said, I have had enough. And my favorite line of his is, we are going to stop the billboard lawyers. We're going to stop
Yeah.
these lawyers that are up and down Interstate 75 and Interstate 10 that
It's
advertise, I can get you money from your insurance company.
ridiculous.
It was
Yeah.
ridiculous. And he summarily, worked with the legislature. The legislature had the forward thinking wisdom to see that this was not going well for consumers. And so the reforms that passed took away many of the incentives to file these lawsuits because it was so easy, because they knew they were going to get attorney's fees from it. And so, a lot of people criticize the reforms as being, you know, insurance company friendly. No, my assertion, it's insurance consumer friendly. These shenanigans that were perpetrated by these shenanigan trial lawyers, what I'll call pond scum in an affectionate way, are making rates go through the roof. And finally, our legislature, they saw it. Well, you couldn't help but see it. And now, what do we see? It's incredible. We've had 17 new companies under the leadership of Commissioner Mike Jaworski. He fosters an environment embracing insurance company capital coming into our state. Talk to any insurance agent. You ask them, what was it like in 2020 and what's it like right now? And they'll tell you. I've got so many markets, I don't even know what to pick from because it is so competitive. And, rates are going down. Now, remember, and for your audience, a difference between rates and premium. Rates are going down so much per thousand of coverage, but premiums are staying the same. Why? Not so much about litigation, but we have this little mechanism called inflation. So look at the cost to replace these homes. The insurance policies, the replacement cost in 90% of the time. The cost of a piece of plywood 4 years ago was $8. Today it's $20. These inflationary trends are keeping premiums pretty level. They're not going down like we had hoped. So I want your audience to remember, those of you that are professional practitioners, do everything you can to explain the difference between rates going down, but premiums per risk, the underwriting per risk, are about staying the same. They're not going up like they were, but they're not coming down like rates are. So please have your audience recognize that and talk about it openly.
You know, I'm loving to get schooled here. So much of new learning. Um, all right. So let's move on and talk a little bit about private insurance reentry. As we have seen more private insurance writing business in Florida, what's behind that shift? And is it sustainable given storm risk and litigation history that we have seen, as you have been talking about?
Let's look at the tale of two states. Let's look at California. Commissioner Lara, smart guy, doing the best he can. You have those fires. You had capital scared to death, investor capital scared to death. And what does he do? He levies an assessment for their residual market called the Fair Plan, $2 billion, somewhere an enormous assessment. I think the Fair Plan's about $6 billion in the whole. And he tells the insurance companies, you're going to write the check, you're going to front the check for this assessment to shore up our residual market in California. And I'm probably not going to let you recoup that money from your policy. Is that any
Nobody's
way to
gonna do
treat
it.
people who are investing in a state? No. So what does Florida do? About 8 or 10 years ago, there was a team of us that recognized that Florida's law was similar, that in the event of a disaster, insurance companies have to stroke the check up front and then go back and collect it from their policyholders. And a very forward-thinking CEO, Senator Lockburt, former Senator Lockburt, that runs Security First Insurance Company with his brilliant daughter, Melissa, called me up one day and said, something's not right here. We need to rethink this. And we worked with the legislature. We explained the problem. Citizens work with us. The CAP Fund worked with us. And what happens is now in Florida, if our citizens has a deficit, they go to the capital markets and get the upfront cash. And then we as companies collect what we need to help pay that debt service and give it to citizens over time. Very vastly different
Of
regulatory
course.
environments.
Yeah.
Florida is doing it right. We're doing it right by embracing private capital. We're doing it right. The companies are competitive. They're riding in places. Who knew that companies would be riding in Miami? I mean, there are companies opening up zip codes in Miami and South Florida.
Mhm.
Not a lot, but it's going to happen. And it's because this governor and this legislature and this insurance commissioner recognizes that a competitive market is what is best for consumers. Companies in the market competing. What we had 3 or 4 years ago was insanity. When agents didn't have, if they were lucky, if they had two
Choices.
licenses, it's
Yep.
terrible. So
Yep.
we're in a really good place. And I know no storms this year. I need to knock on wood. There's 4 people in Jamaica. But this is really going to make things even better that we haven't had a storm this year. So great question. Thank you.
Yeah. Yeah. So you just mentioned about Citizen. Since Citizen property insurance remains Florida's largest insurer, I would assume. Um, how do you view its depopulation effort, and are they helping or hurting long-term market stability and customer confidence?
I want you to think about citizens as a whole. Right now, they have, and I'm going to guess, about $10 billion in the bank. We'll just call it that. At one point, they had over 600 billion in total insured value, almost $1 trillion. Okay.
Wow, wow, that's a huge.
And it was getting the attention of our
Mm.
leaders of our state. And so Tim Serio, another great Floridian, great American, the head of Citizens, said, we got to do something about this. So couple his energy and enthusiasm to get the policies to the private market, which is better for all, get it out of the government's insurance company, and making sure that he can, as best he can, keep the front door shut so that they'll go into the private market. That has been a tremendous signal to investors that Florida is open to business for the private market. Back in the old days,
Yep.
Citizens was competing with the private market. That is insane that you would have a government enterprise. I mean, do we have a government enterprise competing with McDonald's to make hamburgers? No. Do we have a government enterprise competing with Rooms to Go to make furniture? No. Why do we have a government enterprise? And Tim Serial will say this. He's even an advocate to making sure that the rates go back to where they should be, even higher, so that people get a better deal in the private market. So, just a lot of forces at work here to reduce the size of citizens, which reduces the exposure, financial exposure to the great state of Florida, which is better for consumers overall.
Well, that's fantastic. But since it is limited to the state of Florida, let's talk a little bit about national trends. W- Looking beyond Florida, what national trends are you observing in PNC space? And especially as the climate and reinsurance pressures are mounting up.
I follow several other states and what they're doing. I know that claims activity, attritional daily claims are down. And I don't know if that's because the signal that Florida sent that it doesn't pay to just file a frivolous claim, doesn't pay to file a frivolous lawsuit is permeating the other states. I'm also hearing that, look at Louisiana. They're doing everything they can to attract capital and open companies there. The coastal states are doing everything they can to keep the companies in their portfolio. Some of your northeastern states are very worried about rising water. I know Virginia, Massachusetts, very concerned about that. And so a lot of products are coming out. You've heard of parametric insurance. You know, think of the word parameter. And parametric insurance is much, much different than traditional property insurance because you, as the policyholder, set the parameters in conjunction with the insurance company that will trigger, that's the word they use, a claim payment. And it's a novel idea, been around about 10 years, but really taking off right now. Very popular in the flood insurance space, and it could revolutionize. It could be a companion to traditional insurance. So many states are looking at that. FEMA is looking at that. We have the FEMA Review Council, and Kevin Guthrie, our Florida's emergency manager, is one of the leaders on that council. And they're talking about how the NFIP could get into the parametric space and what that would look like. So a lot of bright minds in this country are looking at how to keep policies in place, how to make risk insurable, and how companies can better underwrite for that risk and price for it as well. So great question.
Yeah, thank you. What other product are you seeing in this space beyond, like you mentioned about parametric? What other innovations would, whether it's based on a particular business model or it's based on probably newer technology that is allowing insurers or insurance to just look at something newer?
You
What do
know,
you
it's in,
see?
it's so interesting. I'm 65 years old, and one of my favorite conversations are with young 30 something underwriters, 40
You bet.
something
You
underwriters,
bet.
right? Isn't it awesome? And they love, think about what they use. They have all their toys. They've got expensive bicycles. They race in bicycle races. So do we provide coverage, physical damage coverage for these $10,000 bicycles? The new cars that are on the market and what it costs to repair those cars. And should we look at, you've heard about the mileage and how you track
Yeah.
your driving and all those innovative ways to see how we can reduce risk and underwrite better. The sky's the limit when it comes to what we can price and what we can cover to provide the promise to people who have, even unique items. A lot of the homeowners companies are listening to insurance agents, and they'll even have listening tours. The CEOs and underwriting executives will say, "What are you hearing from your policyholders? What is it that they're is it a specialty boat coverage? Is it
Mm.
a specialty golf cart coverage?" I mean, there's the sky's the limit as to what we as an insurance industry and the innovations that we come up with to provide insurance companies to provide insurance coverage at the right price. And I think we'll see a lot more of that innovation. Hopefully we can attract more of that 30 and 40 something generation. Many in my generation are retiring, which we're losing a lot of that institutional knowledge, but I think we have a lot of opportunity with the very bright minds that are looking to lead the insurance industry.
Absolutely. And I think, it's we can be, as you said, we can be a little bit worried about losing that institutional knowledge, but I always believe that that's a natural course of action for the new generation to take that space, just They may fumble a couple times, but I think they will get to the right spot and
Totally,
great
totally agree.
innovations.
Absolutely.
Since we're talking tech and innovation, and we cannot not be talking about AI today. There's a lot of discussion about AI in underwriting, in pricing, in distribution, in claims. What opportunities and risks do you see, and how can regulators strike kind of a balance between innovation and accountability? Because I think if one misses the turn, other is gonna just go the other way.
You must have been listening to the Florida House of Representatives on October 7th. On October 7th, in the Florida House of Representatives, the Insurance and Banking Committee, there was an entire panel about artificial intelligence and its use in the insurance industry. And I loved what Paul Martin said with one of the national trade organizations. He talked about the fact that if it can be done by a human, it most likely can be done by AI. And so the same regulations that regulate what a human does, there's enough laws on the books to regulate what AI does. We don't need any special laws to, ramp up how AI is used. There's this boogeyman out there that says AI is bad. It's going to hurt people in claims and it's going to, prevent people from getting coverage. I don't agree with that. I mean, we're all used to using, I say we're all used to it. We use AI in many forms. I mean, we've got coffee makers that tell us how big the coffee cup should be, for God's sake. It's so prevalent everywhere that we go. And so I'm all about using the new tools to make it more efficient, to produce the policy, to make it more efficient, to adjust the claim. I'm not, we've got a bill that's been filed that talks about the human element in claims and how we can't let AI make a total decision. I don't know of an insurance company that would even do that. I mean, it's just not, we use it maybe for initial investigation, to look at what Google Earth's got to say, what did the property look at like before the claim. But this fear mongering that AI is bad and it's going to hurt us, I think is just misplaced. And I think it's going to make the insurance industry better, stronger, and it'll be used correctly, or otherwise people won't buy insurance from companies that don't use it right. And they, as we are in Florida, we can go to another insurance company if we don't like what we're seeing, how people are using AI. So we're at a really good time now. And I just hope the legislature in Florida doesn't do, and you're seeing in other states, the NAIC, the National Association of Insurance Commissioners, has a working group on AI.
No,
We'll have to watch
I
what
don't
they're
think.
doing. So we just got to let it go, let it
Yeah.
run.
Just for argument's sake, I think, as you said, the liability and you have to treat them like human. Yes, for a moment. But who is gonna take that, own that risk? The guy who owns that element, that AI product, or the company that built that AI product? Because the guy who is using it has zero understanding of that, what it took to build that AI, and now he is liable, if at all, or the company who built it is not controlling it. So it's kind of there is a lot to be unpacked to understand actually where does that liability and that risk actually falls.
I'm going to close with this because this has been an awesome opportunity to spend time with you. When you talk about liability and who's responsible for what, only the courts are going to decide that. And it's
That's
just
true.
too premature for us to anticipate who's liable, who's at fault, who's responsible. We'll let the courts sort it out. But in my humble opinion, the use of AI is the right thing to do. It's more efficient. It's no different than back in the day when you had two executive assistants setting your calendar. Now
Absolutely.
executives do their own calendar, right? So we just got to go with the times, let it roll. Consumers, Commissioner Yaworski has said 100 times, Florida Commissioner Yaworski, the top of my spear sits the consumer. And anything that does anything that hurts that,
Benefits them. Yeah.
right, I'm all about it. So,
Yeah, absolutely.
I appreciate you having me here and being able to talk about these very important topics. And for those that want to follow my work, they can go to lisamillerassociates.com, www.lisamillerassociates.com. We do a newsletter. We do the Florida Insurance Roundup podcast. And, I talk to people all over this country. Right now, I'm following the NFIP shutdown. I've asked a tough question. How many real estate closings have not occurred because of the shutdown? I've not heard of one. So this
Mhm.
insanity about it's going to kill the real estate market, Florida's got a very robust private flood market, and we are rocking and rolling. We lead the way,
Absolutely.
the legislation that we passed in 2014 and 15, and we're going to be just fine. We'll see what the other states do. So you've been awesome, and
You
I just
bet.
appreciate
Thank
giving
you.
me the
Thank you,
opportunity.
Lisa, for giving me this opportunity, for allowing me to share such wonderful thoughts of yours with this audience. And I'm sure we'll have a lot of feedback and people will be reaching out to you. Thanks for your time. Appreciate it.
Thank you. Talk to you soon. Bye bye.
All right.